drivers of growth into 2022, which is basically over the next 12 months or so, it brings us to our medium term, are going to be pretty different than what we saw back in Q4 of 2021, basically in the short term. Over the medium term, the first thing that I'd just like to highlight here that we expect is kind of a moderation, stable, moderate levels of growth onto 2022. Some of this you can see reflected in our annual forecasts. A lot of this you can also see reflected in kind of that stability that you're likely to see there over the next 6 quarters or so. Some of the big drivers of growth, we're now moving on from revenge spending, pent-up demand, base effects, COVID-oriented factors, onto more medium-term themes. So the first thing here is in terms of public investment in infrastructure, manufacturing growth, consumer spending, but from a certain category of income segments, which is basically your higher income segment. A lot of these different factors is what we basically expect will drive some of that medium-term growth. Now, one additional thing that I do want to highlight here that we have gotten as questions from different clients before is this entire theme around what's likely to happen with additional waves of COVID. Now, like I was just talking about, which is the impact of that first wave compared to the impact of that massive second wave, which actually didn't see that much of an economic impact. That's basically the benchmark that we are using into what our expectations are for 2022. Now, I'm not going to sit here and say that we're likely to see this very smooth upward trending line. That's definitely the way things are going to go. But if you're just looking at it from an indicative perspective, or to get a sense of what that overall annual growth trajectory is likely to look like, we have a pretty high confidence attached to that. And the reason why I say that is basically two things. The first one is the impact of any kind of additional waves of COVID, no matter how large. The economic impact of those additional waves is likely to be less and less moving forward. And you can see a pretty clear example there in the difference between the impacts between the first wave and the second wave of COVID. And the second reason why we assume it's going to see kind of a moderate, stable level of growth into 2022 is also vaccinations. We don't want to ignore the impact of that vaccinations are likely to have in terms of the public fear level, in terms of business confidence level, in the sense as to what consumers as well as businesses and the government is likely to the way that a lot of these different entities are likely to deal with additional waves of COVID. And so those are just the two factors. Number one is the example of what happened with the second wave, the economic impact of that. And number two is in terms of the pace of vaccinations. Across both of these metrics, we do think that things are likely going to stabilize much more than they did over the past maybe 20 months or so. So that's just something to keep in mind here. We also wanted to provide a little bit of a perspective here in terms of where does India really stand from an overall APAC perspective. So some of the growth rates that you're seeing here, and India here is on the leftmost side, are basically exactly the same numbers as you saw on the previous slide. Now, India here, the first thing that I would just say, if you're looking at a medium-term perspective, and here we have growth rates onto 2023, the first takeaway from this slide should definitely be the fact that there is this degree of sustained recovery that you're likely to see from, say, 2022 and beyond. The second takeaway that I would have from this slide is the fact that growth rates in India look much better than they do in a lot of the different APAC markets that you see on the slide here. Of course, here we have ASEAN 5 as a whole, just in order to make sure that we have enough space to occupy all of the different markets. But the point here still remains that for any of our listeners who do have this Asia Pacific portfolio, when you're looking at prioritization into 2022 and beyond, this is certainly something that you would want to be looking at, which is the fact that India's growth rates, no matter what happened, 2022 was of course a particularly bad year for the market. And so we can even ignore the 2021 number, but when we're looking at growth rates from a year-on-year growth perspective, certainly India does come out quite strongly over the next couple of years. So that's definitely something from a medium-term planning perspective that you would want to keep in mind. But I don't want to create a sense of unnecessary optimism here. We cannot ignore the fact that COVID-19 has left some pretty significant scars in terms of what that expected medium-term economic output should have been versus what it will be. So here what we have is basically a heat map of the entire globe, but we'll specifically just be talking about India. Now, what we did was specifically to identify where would India's economy have been in 2023 if the pandemic hadn't hit versus where it will likely be now that the pandemic has hit. And so what we basically did, again, we really like to use these index levels because that really gives us a grasp of what's actually going on in the market versus what some of these growth rates would have you suggest. Now, what we saw for India in particular, when we compared our Jan of 2020, so pre-pandemic level of overall economic output expected in 2023, compared to what some of our recent forecasts are. India, as you can see here, is in red. What red means is that there is at least more than a 6% fall that will likely happen in terms of India's overall economic output in 2023. So over the very medium to long term in 2023, had the pandemic not hit versus now after the fact that the pandemic has hit. For India in particular, that gap is of more than 10%. And so for any of the listeners on the line who did have a certain expectation of the market a couple of years ago when you were putting together some of your maybe 3 to 5 year forecasts, definitely this is something to account for, something to look back on and revise if necessary, to basically account for the fact that now, even over the medium to long term, 2023 is way out. Even in 2023, you're basically likely to see, as a result of this shortfall, you're likely to see this growth happen, but that growth or that overall economic output is really not going to be anywhere close to where it would have been had the pandemic not hit. And so certainly something to really think about in terms of the overall scar that this massive economic shock has left, specifically on some of the emerging markets. Definitely something to look out for when you're really looking at where to prioritize in your overall portfolio. This really gives companies a sense as to what they should be thinking about, really beyond some of those year-on-year growth numbers, which for India definitely do look quite good.